I want to start off by saying that this class is not about getting into your standard appraisal rules and how an appraisal works. We're going to do a little refresh on that because I think it's important. But this is about changes that will impact every transaction that is going to happen after November 2nd. So this is based on a form change. Basically, the old appraisal forms are completely going away. There was a separate appraisal for manufactured homes. There's a separate one for condos. There was a separate one for single family. Everything is going to this 3.6 form. And there are some perks I've already seen come out from Fannie Mae and Freddie Mac once this transition happens, and also I'll highlight those. But a really big shift. And I want to start off with telling a story, which is when I was in the business in 2006. A couple years later, the meltdown happened 2008, 9, and there was a piece of legislation written in New York by then Attorney General Andrew Cuomo, and he called it the Home Valuation Code of Conduct, or HVCC. And it was originally only meant to affect how real estate was done in New York. And one of the things that he was targeting was, hey, part of the reasons why these home values have crashed or real estate has dropped is because there was all this collusion between the lender and the realtor and the appraiser, and Mr. and Mrs. Consumer didn't know any better. And there needs to be some separation here to protect the homeowner, protect the buyer, because the appraisal is a way to protect the consumer that they're not overpaying and that they're getting a fair market value for the house. Now, obviously, there's always, unfortunately, a few bad apples in any industry, in any business, and I'm sure there was collusion that was happening. But there's an unintended consequence is during this time, I had appraisers that would come by the office, and like any business, they would work to market their services to other business owners. And so I had appraisers that said, hey, we want to be your exclusive appraiser. We will guarantee turn times in 3 days, and we'll do it for $275. And so at that point in time, before HVCC went into effect, I could deliver to the consumer a very fast appraisal with a local licensed appraiser, and I could do it for under $300. Overnight, HVCC came out, went into New York, it then spread, and it was adopted by Fannie Mae and Freddie Mac nationally, and it got called AIR, or Appraisal Independence Requirements. And that's the current policy today that dictates how we as banks and as realtors communicate and interact with appraisers. And there's a lot of misunderstanding with that. We joke about you can't look an appraiser in the eye, you can't talk to them. And that's not true. There are things we'll cover today about what's been misunderstood with AIR. But I share that because I watched something start in New York and was told, this is just going to stay in New York and be there. And then it got swept across the country. And here it is, has completely changed. Imagine being an appraiser. Overnight, those relationships, all those offices and banks you walked into to build relationships was gone. And you had to now just go scramble. And there's, to the present day, there's two ways that appraisers get work. Either a mortgage company or bank will set up an appraisal desk. So that's a separate desk that's not tied to commission loan officers or anyone who's paid a bonus off of the transaction or revenue off the transaction. These are just staff people, completely separated from the production, and they coordinate quality control with appraisers, signing up appraisers, managing the logistics of a transaction, of ordering the appraiser, getting the report. So that can be done internally through an appraisal desk, or there are now third-party companies called appraisal management companies, and that's their whole business model. They're basically an appraisal broker, and they can broker for appraisers to multiple different banks. Well, since that change has happened, what I've seen is the average appraisal turn time for me was 3 days, and now it's 5 to 7 days. And the cost of an appraisal is anywhere from $500 to $800. So the impact to the consumer is now they're paying more and things are taking longer. The argument, it is safer and there's no bias or collusion in there. But that's the ripple effect, all these years later. Now, this change is going to be, I think, as significant as we saw there, if not more so. And I want you guys to know specifically from a realtor point of view, what you need to know and how to get in front of it. Because if you don't do anything differently, you will probably be impacted in your transactions. You will at least be surprised. And you might actually have some clients upset with you based on things that they might point the finger back at you. So we're going to go ahead and get into that. I don't want you to get into how to do an appraisal. This is really just helping you understand logistically how to manage this change. So what we're going to cover is what the 3.6 is. That's the actual form name. That's what Fannie Mae and Freddie Mac are calling it. Why have they made this change? You're going to see what the new appraisal looks like. So you actually see the format, which I really like. I actually think as you see it as an agent, as the consumer gets it, we'll all agree that it's a cleaner looking appraisal and what you need to know as a real estate agent to be prepared for this change. These are common frustrations I think that happen, and I think that you're going to still continue to see this. This change is not going to eliminate disagreements about value. There can be some argument that this might help with upgrades. This doesn't change communication frustrations, but we're going to cover some best practices with that. I think slow turn times is actually going to be multiplied in the short term, and I'll talk about why. And in terms of getting an appraisal changed, we will talk about revision requests and I think a better way to go about it. And the major goal of 3.6 is to become more uniform and to be more data centric versus some of the subjective opinions that change from appraiser to appraiser. So you hear me say this, what exactly is 3.6? Complete redesign. The old forms that you saw for appraisals, we'd call a 1004 or 1007, those are completely going away. Homes are valued the same. So what you've done in the past to comp, if you've taken a lot of appraisal classes, if you have talked to a lot of appraisers, you're not going to have to learn new methodology. But the way the reporting's done, you're definitely going to approach it a different way. And we're going to show you what that looks like. So again, valuation's the same. The reporting process is different. There's a big emphasis on machine learning and technology, and you'll see that too. So because we're focused on that, I did think it would be a good idea to give you just a little refresher. I didn't want to do a whole class on this, but I do want to cover some best practices. Appraisers are told to follow USPAP in terms of their code of conduct and how they comp. And I see that the biggest disconnect between, I think, a real estate agent that's good at comping a property and is good at speaking to an appraiser understands this right here. So I want to walk through each bullet point and kind of talk to each one. And I'll say what I've shared or I've seen in my career. So I've done close to $2 billion worth of loans personally. I've been doing lending. This is my 20th year in it. So I've seen everything related to good appraisals, bad appraisals. I've seen revisions. And so I'll just give you my little anecdotes on each one of these. So location, the common practice that you'll see appraisers do is stay within 1 mile, but it does not mean that 1 mile is a hard and fast rule. In fact, I've seen several instances where there's a good justification to go beyond the mile. And in some cases, you have to go beyond the mile to get a good value. And I've had scenarios where we've had to challenge or fight appraisals, and location was one of the reasons why we won. And I'll give you one quick story that comes to mind. Where I live, there are co-op communities. There's only about 2 in town, and they are completely different sides of town from one another. And so it's very hard to comp that. If one of those communities has a lack of sales, that appraiser might have to go clear across town, miles and miles away, to show what the adjustment should be for a buyer who is wanting to live in a cooperative community. Another example I had was an appraisal that was almost $40,000 difference from the client was working with a national lender who did not have the local appraisal desk experience or expertise. And they had hired an appraisal. The appraisal came in very low. The homeowner was upset. And the homeowner explained that the appraiser selected several comps that were not behind the gate, as the homeowner was calling it. And they said, look, I live in a nice area. I believe this was up in Skyline, if memory serves correct. And that's a beautiful neighborhood. And then right behind this elevated neighborhood is an even more exclusive part of the enclave that's behind a gate. And those comps changed drastically. And we did an appraisal as the local lender, and it was literally weeks apart from the prior appraisal they had. And the value was tens of thousands of dollars different because of the adjustment of location. So mile is common. You don't always have to stay within the mile, but you have to have a good justification of why you went outside of there. The next section, age, I see realtors will sometimes pull comps. Maybe they have a house that was built in the 90s and they're comparing it to a house that was built in 2020 and they're not making any adjustment. And so a buyer is not going to want to pay the same price for a house that's 20 or 30 years old. versus a brand new house. And so even if the square footage is exactly the same, you have to make that adjustment. And an appraiser is typically going to take off of a house that's older unless it's been significantly remodeled or updated. All right, so then GLA, this is one I would definitely emphasize because two things I see happen with GLA. One is appraisers like to stay within 10 to 20% of size, and you want to make sure that you're looking at the gross living area the same. For example, I'm in Arizona. We even have a room named after us, the Arizona room, which is often not permitted. And it doesn't mean that an appraiser is not going to give you value for that. But if you have a house that's 1,500 square feet with a 500 square foot Arizona room, you shouldn't comp off of 2,000 square feet. You should comp off of 1,500 square feet and stay within 10 to 20% of that size and then do an adjustment for the Arizona room. But you're not going to get the same price per square foot because, again, it's a 1,500 square foot house, not 2,000. And this is an area where I see big disconnects between how the realtor comped it and when the appraisal actually comes in. This is also true for non-permitted additions. I've seen some appraisers that will include the non-permitted addition in the living area. And as long as it was done in a workmanlike manner, you can't even tell. And I've had others that say, no, it's not permitted. The homeowner's going to have to go through a permitting process. So I'll give them value for it, but I'm not going to give them the overall gross living area benefit. So make sure that you're staying within that 10 to 20% of size and make sure you're measuring the right size to begin with, that you're focusing on permitted square footage. Condition is something that I find in talking to real estate agents, they're completely unaware of that condition change happened several years ago. There's actually a grading scale, C1 through C6. To give you an idea, no lender that I know of, no bank I can sell a loan to or bank I've ever worked at, and I've worked at 3, will do an appraisal on a C6 property. So what does that mean? Well, a C1 is new construction, so brand new house. A C6 is, as you can imagine, like the worst condition you can possibly get. So most lenders want to do loans at C4 or maybe C5. I had one scenario where it was a distressed property. They were going cash. It said cash only, but the listing agent was, or the buyer's agent was saying, is there any way we can get a loan on it? And they had actually put a one countertop, one cabinet, and one of those garage sinks inside the kitchen to make the kitchen livable or habitable. And when the appraiser called us back and said, yeah, this kitchen, I mean, I don't know. I'm going to have to call this maybe a C5 or C6. That would have killed our ability to get a mortgage on it. So what we asked the appraiser to do is to give us back the report and do it subject to a C4 rating, which the appraiser said, okay, you need to install a better quality sink. You need to put more cabinets in there, and then I'll make that a C4. So just know that as of right now today, this scale works the C1 to C6. But I want to emphasize that because I think this is one of the very early changes that has been made that U.6 is going fully to embrace. They're trying to get away from subjective opinions and make it very, very data centric like this. The condition tiers are very specified. It's not remodeled or updated kitchen. It's this kitchen is a C2 or the condition quality. You want to pick similar styles. That's pretty much a no-brainer. I do see cases though where there's been disputes and it's because the appraiser is only using 2-story homes and the realtor used 2 stories and 1 story. So stay similar as much as you can. Bathroom bedroom count's pretty straightforward. Lot size, that can make a difference. Where I see a mistake that is made between appraisers and realtors is there's a certain point in lending where the land value doesn't make a difference. Now, that's hard to think about because a buyer, of course, would want it. If you have somebody who's interested in land, of course, they're going to pay more for 50 acres than for 5. But lenders, when it comes to mortgages, lenders have the idea that we're here to give you a loan against the house. And yes, a house that's on a bigger lot is worth more, but we're not here to buy land or to lend on land. So there gets a point where land is going to cap out or diminish the value increase. And I've seen some cases where there's too much emphasis given on land, and that's okay. A seller can sell for whatever they want, but the bank is not in business to do land loans, and there's a lot of emphasis to appraisers to cap, like 30% of the overall value on land. So 10 acres versus 50 acres doesn't really make a difference. Upgrades and finishes, that's self-explanatory. We're going to cover a lot of that in this class. parking. These are really more adjustments. I do want to emphasize sale date though. When you have a lack of sales and you have to go backwards, do you adjust up or down based on the market? Sometimes agents will give me rebuttals and they'll have no closed sales in the rebuttal. They will only have listings. And they'll say, look at, we're selling for 500. Here's another listing at 510. But if that hasn't sold, that's not going to help your case. So you want closed sales, the more recent, the stronger. And if you don't have anything in 6 to 12 months, you can use older sales, but you really need to then go in and make your adjustments and defend and explain the market. And those are things that lenders look at very closely. Arm's length transactions, they're going to want your standard open market. You want to try to leave off distressed sales and things like that, bringing your value down. And that's going to be important too on this new change, because if there's a bad comp or something, you want to make sure you're proactively communicating that to the appraiser. So this again is just a good cheat sheet. This is not about the 3.6 changes. This is just helping real estate agents get more calibrated with how an appraiser is actually looking at comps. So why are we getting into these changes? What actually is happening here? The current forms were created over 20 years ago. There's a lot of technology changes. I did this class a few weeks back and I had an appraiser saying, I used to use index cards and I went to a notebook, and he goes, now I'm out in the field with an iPad and I take photos right on the spot with my iPad. So technology's changed a ton and the system really hasn't moved with it. So problems that come out of that is it's inconsistent descriptions and properties. You have way too much just free form. I mean, if you look at an appraisal today, there's pages and pages, paragraphs of just, the appraiser's opinion on there, and the opinion can be subjective. It can be very different from one to the next. Information that's important gets missed from some appraisal reports. The software has been outdated because of how old it is. And that just slows things down, and it makes the lender have to go back and ask the appraiser more questions. So really what this comes down to is there's a lack of consistency. And this is what I find my real estate agent friends complain about. We had 2 appraisals in this house and they're $50,000 apart. I've always said appraisals are half art, half science. There's the science part of how they have to do the comps, and that last slide that I gave, where there's all these bullet points they have to follow, but then they get to apply their opinion to it. And, where I live in Tucson, for example, there's a well-known neighborhood by the University of Arizona called Sam Hughes. I've seen an appraiser come down from Phoenix. They're licensed in the state. They're completely legal to practice in Phoenix and in Tucson. And if they come down and they look at that neighborhood and they go just a half mile down the road outside of that exclusive neighborhood, the value can change $100,000, and that could drive down a comp significantly. And I've seen that happen. I've had to fight that the appraiser didn't know how to stay in that little neighborhood. So that's where the opinion piece can be problematic. The other example on this slide is, let's take a kitchen. You might have one appraiser describe the kitchen as updated. One says it was nicer remodeled, and one says finishes. What does that actually mean? How do you adjust for that? Is one going to give the appraisal of the kitchen a $50,000 adjustment, and one's going to give it 30, and one's going to give it 40? And again, there you have swings, $10,000, $20,000. So this new form is going to remove those vague descriptions, and everything is going to follow data fields. So that way the appraisers they're compressing the range of variance. And I think, Natalie, you've joined us, correct?
Yes, I'm here.
All right. So I'll do some bouncing off of Natalie's just to share with you guys. Natalie runs our appraisal desk. It manages dozens of appraisers all over the state. And I feel it's a competitive advantage that we have because I've used AMCs. The company I work at currently has AMCs. They have dozens of them. And when we opened business in Arizona, we tried these AMCs and we just didn't like it. We didn't like being one of many. We didn't like that this company would hire appraisers that maybe even lived in the area, but on the outskirts of town, and they're coming to somewhere like Sam Hughes and they don't really know the area. So getting someone like Natalie, how long have you been in the appraisal business?
Since 2002.
So she has over 20 years experience. She sees all the different issues. She knows how to read appraisal reports. And so I thought it'd be great to have her here today because, she's talking to appraisers. She's dealing with reconsideration issues. And so, how would you say that this slide pretty much encapsulates the issue today, or would you want to add anything to some of the problems that we see with today's appraisals?
Oh, absolutely. It's subjective, right? One appraiser may say it's nicely updated, like you have here. Other ones just say updated kitchen, very vague. What's the adjustment going to be? And with the new form, they're going to be forced to put it into one category. And then Fannie and Freddie are going to be monitoring how many percentages these appraisers are adjusting for those kinds of differences. Yeah, I think that's explains it very well.
Awesome. Well, thank you for that. So now that we have that, let's get into what the goals of 3.6 are. So we want to break that subjectivity down, become more consistent, make the appraisers are going to be using the same data. It's not going to be on page 17 for one appraiser, on page 3 on the other. That can sometimes create issues or delays. That'll give us more accuracy, better transparency. And then really there's a big tech push here. I think, Natalie, you were telling me that the amount of data inputs can go up to, is it over 8,000 now?
Yeah, it's around there. Yeah.
And do you
It's
have
it.
any
Go
idea
ahead.
what the current form is at?
I do not. I do not. No.
Yeah. So, and this form is unique that it's like a web-based form where it builds based on what the appraiser is doing. Can you talk about that?
Yeah. So as you're going through the report, first of all, it's in sections. So the site will all be in one section. So let's say in the site they drop down, like it backs a busy road, then information's going to come out about that. And then they have to comment on that. So every section, the appraiser has to fill out all the information about that section. And it keeps changing depending on what they check, what they don't check, and then they can go on to the next section.
So I want to elaborate on that. So what that means is it's not like one template where one form that you learn and you master, and you're like, okay, I know I have to answer these 5 questions on this page. When you answer a question about the home, there might be 5 more questions that pop up that every appraiser will be forced to answer. And that's that accuracy and that drilling down on the data. And that's why it could go from, a 5,000 point appraisal to an 8,000 point appraisal based on the uniqueness of the property.
Yes, and also what happens is in underwriting, so then the form is forcing the appraiser to answer all the questions that Fannie and Freddie want and the underwriter. So we're seeing less revisions needed because the form is forcing the appraiser to answer the questions that we would want to know.
Now, there's going to be positive that comes out of this, but just from the appraisers that you've talked to, what are the feelings? What are the thoughts and feelings on this?
The appraisers, it's going to be a big change. It changes the whole way that they're doing appraisals. I mean, you still have appraisers that are using clipboards and tape measure. Well, they can still do that, but this is going to be more technology that would help them to be more efficient. So a lot of their tools, they're going to change, and the way they do the form. From what I hear, the appraisers may spend more time at the property using a tablet, entering the data from the field, and then when they get back to their desk, they don't spend as much time as they would writing up the report as they do today. So it changes their whole way they do appraisals. Big change.
So they're probably going to get the property a lot more because they have to capture all that information. If they don't capture it, it's just going to delay the report.
Yep. Or they might have to come back out. And that may happen at the beginning. I mean, this is a learning curve for everybody. It's so that they may need to be coming back out.
Now, you heard some appraisers say that they're not even going to get on board with the changes. Is that right?
That's correct. I have spoken to a few appraisers that some just are going to focus on VA right now because VA is not making the change. As of right now, you have some appraisers that have been around for many years that may just do private work and they have enough business doing that and they don't need to make this big change. There is also some appraisers that I've spoken to that may be taking a little bit of a break at the beginning of the chaos and see how it all settles and then make a decision if they want to continue on.
And that's important to emphasize because, I talked about HVCC early and how it was only a New York thing and it swept. So this change is only a Fannie Mae and Freddie Mac change, but it could ripple into even VA could decide to adopt this once it's done. But there are several appraisers that, I talked to as well that said They're not doing it, everything in between, retiring, only doing VA, which will lead to, this could lead to longer turn times and higher cost because, as Kent in my first class, he said that it takes him about 2 or 3 hours to do an appraisal today. And with the new technology, just on tech support alone, he spent 10 hours. He spent 10 hours back and forth trying to get the technology worked out. And there's still a lot of bugs.
Yeah.
And he's like, I can't earn a living if my turn time, when it goes up 5 times to complete a report, I'm going to have to charge more because I can't get as much work done. And as I'm going through, it's going to take longer. That was his message as an appraiser, saying, expect there might be higher fees and expect longer turn times. Have you heard that from more appraisers?
I've heard that from more appraisers and I'm experiencing that in real time. So we have been doing some live orders and that is what we're seeing.
So from an agent point of view, this is one of the first big changes I want you to be aware of as a realtor is if you're doing a standard, the way you do a standard, let's say you're doing a 3-week close and you want to do a full inspection period and bins a response, and the appraiser is going to take now no longer 3 to 5, it's going to take them 7 or 10 days, that deal's not going to close on time. So we have two options. We either communicate to the buyer the importance of ordering the appraisal sooner, so that way there's enough time to get the information back and act accordingly, or we have to push more time out and readjust the closing date either at the initial contract acceptance, which I think would not be a bad idea. If I was an agent at this time where it's going to affect November, I might say, hey, we want to do a 40-day close or a 45-day close so we can get through and order the appraisal. Or at the time that you get through the Binzer and you see where you're at, do an extension at that point in time. So get more time in the front or get an extension based on how the Binzer breaks down. Sometimes the Binzer's fast. Other times you need a full 10 plus a response. And what's going to happen is no matter how many times you call the lender's not going to be able to move that close date if they don't have the appraisal. And the appraisers are telling us this is messy right now. It's buggy. We can't change it. The agencies are forcing it. So we need to be prepared for the fact that it will take more time to get through it.
We have a question on the quick question. It says, will data brokers still be used or will the appraiser have to do it all?
Well, that's a good question. It's depending on what the loan will allow. So we do see more data collection as an option, but if you need a full traditional appraisal, it will be an appraiser.
Yeah, and that's the emphasis on this is that with more data and with the average age of an appraiser being near 60, we're running into a shortage in that industry. And so the last couple of years, what would you say now? Probably the last 3 or 4 years that they've opened up the ability for someone to go out and collect the photos and the data. It still needs to get reviewed by an appraiser or reviewed by the technology, but someone else who's not a licensed appraiser can at least get conditioned photos. And so we might see a lot more of that, like entry level type data collection with an appraiser reviewing it.
Yeah, so you have two different options. You have one where it's just data collection. The agencies have accepted the appraisal value and you don't need an appraiser to review anything at all, just a data collector to come out to get the data at the house. And then you have the hybrid where the data collector comes out, collects all the data, and then that's given to an appraiser and the appraiser never goes to the property.
Yeah, so that is being currently used, and my opinion is it will probably be used even more in the future as some appraisers say, yeah, I'm not doing this.
Or maybe they'll be giving that more of an option during that this transition time. Is kind of what I think too, but I don't know for sure.
Yeah, looking at let's get into some of the changes. So these were the old forms that were used. There was a separate appraisal for single family, a separate one for condos. You could do it exterior only, and just wasted sections in paper that wasn't needed. We talked about this. This form is dynamic. It will change based on the report. The questions will change based on, it's like a tree. You'll answer one question, 3 more will pop up. And so it's going to be the same every time for every type of property based on the appraisers. So it's a smart format that will adapt and it will be consistent for each appraiser rather than using one size fits all that usually creates wasted space. Second big change is reports today. That art part of an appraisal report is a lot of opinions, long paragraphs, and that creates confusion. I've had some appraisal reports where the appraiser says it's as is, and then they'll go into, on 3 pages later, they'll tell a story about the house being in really not so great condition and that the lender may want to have this thing done and may want to look into this. And of course, the underwriter says, Well, based on what they're saying here, I want them to go fix these things, or I want to go investigate. So we're getting away from the story format, and again, really replacing the story with data. So we want Fannie and Freddie want to have it specific and not vague. And the right-hand side, this is what the appraiser Kent was really pointing out, is that, and probably what you were alluding to, Natalie, about being at the property, they need to know how many cabinets and what type, and what's the model and how old is it, when was it put into there. And so they're going to be way more specific on finishes and the condition of the property. And a question that an agent asked in that class is like, well, how do I get that information? When you're doing your listing presentation, you probably want to walk through with the homeowner and talk about the house. Let's look at the kitchen. Let's look at your finishes and make notes. If you have invoices and bids, give that to me, because I'm going to put that in a package to the appraiser. And if you don't, then the best thing that you can do is per the homeowner. So that was a question, is what if my seller upgraded their kitchen and they don't have the bid anymore and they don't recall, they don't have the receipts? Then you could ask them, well, how much did you spend on those cabinets? So I did those 8 new cabinets, I think 3 years ago, and it was this much. And you can list that per the homeowner. They spent $15,000 on cabinets. And again, the appraiser is going to need that information to finish this. Anything that you would add to that in seeing this in live practice, Natalie?
No, but it really does reiterate that I do think the appraisers the inspection time is definitely going to be longer for them.
Much longer, because they have to have they're really itemizing the house now versus just that. That was a complaint I heard a lot. The appraiser was here for 5 minutes. They walked through the house, they asked me 2 questions, and it came in 10K low. And now they can't get in and out of there in 5 minutes and get all this information.
And they also now have to measure the ceilings as well, which they've never had to do that. So that's interesting. That will be new for them with lasers, probably.
That's interesting.
Yeah.
There's now quality levels too. So remember that condition was something that has been in place now for 5 to 7 years, probably, with the house being C1 through C6 condition. Now they're going to have a quality rating on the cabinet. So if you have old beat up cabinets, it might get a Q6 quality, and that way it's not so subjective of, oh, the house is dated. And they're gonna have to say on a scale of 1 to 6 the actual condition of the countertops, the cabinets, and that's gonna refine how adjustments are made. Major change number 3, they're gonna get way more detailed. So kind of we talked about this in the prior slide, but this gives you the example. It's gonna standardize the condition. It's gonna get way more detailed about renovations, drill down on functional utility, the quality section I was just talking about, Q1 through Q6, an emphasis on energy efficiency, which I want to point out this. There's a lot of focus in the industry as a whole on solar, and the mortgage industry is really getting involved in solar. And I think there's a disconnect from realtors on what that means for how they sell houses. Solar is a pain point for a lot of agents where they're like, man, dealing with the solar transfer is a nightmare. And I agree. I've lost count of loans that have died because someone who was qualified for a mortgage couldn't get approved for a solar company transfer, and it just died in the 11th hour. But there are current mortgages being done right now where the mortgage company is funding the solar. So there's never a solar lease, never paperwork. There's never a problem with the transfer. And I think you're going to see even more energy efficiency positives in terms of adjustments or value adds because of this in the next few years. And it's going to confuse some realtors because they're going to go to a client's house and they're going to say, you have solar, who's your solar company? And the client's going to say, I don't know, I don't think I have one. CrossCountry did my mortgage. And the agent's going to say, yeah, but who did your solar? We need to get that information from them. And they're going to go, I don't know who that is. So just understand, as a real estate agent, the early days of solar were the first companies to market, Tesla and Solar City and these others, that they were good at installation and third-party finance. And that third-party finance was the pain in our sides. Now that mortgage companies are getting involved, especially FHA. FHA has a wind and solar initiative. You're going to have homeowners that they're going to tell you, I got solar and I did it with my mortgage company at the time I bought the house, and there is no third-party company. And that's going to be good for you to know and convey to the appraiser, because they own that solar day one, which means they get the value for it. A lot of solar right now is worthless because they don't own it yet. They're still making payments on it. Where the ones where your client went through a mortgage company like us, we do a lot of these loans, they will get the benefit day one because they own it day one, and you'll never have to deal with the transfers. And then site improvements, I want to talk about this one, good and bad. So you were saying, Natalie, that a lot of the headaches that you're hearing from appraisers are related to ADUs. ADUs are kind of bugging out. The form's not working so well with ADUs.
Correct. Yeah.
Any context you want to give me on that?
Yeah, the form fillers are still working on this. There is going to be an update that's supposed to be coming out beginning of September. Right now, the appraisers in the grid where they're adjusting for ADUs and outbuildings, they're having some issues and they can't add the adjustment. So that's a big issue, especially in your guys' market. You have a lot of ADUs and outbuildings. So everyone is working on that and aware of that right now in these beginning phases when it's not required. We are trying to order appraisals that don't have those issues because we don't want to bottleneck the system and delay things. But I'm hoping the form filler should have an update the beginning of September. That should take care of that.
Cool.
And
A
Derrick,
positive.
sorry.
I see. I'll get your questions,
Okay.
Alan. So a positive related to the ADUs is, for the longest time, one of the issues with financing has been multiple units on a lot. Like, I'll get a phone call and it's like, hey, I got this manufactured home and it has another one on there. Can I do that? Or I have this house with an ADU, but it's almost like a duplex. And the agencies have been very clear that you can only have a single family home with a smaller ADU or guest house. That has changed. So underneath the 3.6, they are allowing multi-unit ADUs. And like where we live, my municipality a year ago passed a streamlined ADU permitting plan where you're allowed to build ADUs, get your permits faster. And now they did that a few years ago. And then a year ago, they said now you can do 2 units. And there was a gap between what the city was allowing and what the agencies were allowing for mortgages. And with 3.6, they are now allowing multi-unit ADUs. So that's a good positive change that's coming out of this, is that you can have a single family house and you could be a homeowner, a realtor, investor, and go develop 3 units on the back and live in your house for free because now you're renting out the 3 units. And for the first time in decades, that's going to be permitted through a conventional mortgage. This for all loans, FHA and VA. So this is primarily from being driven by Fannie Mae and Freddie Mac, which is conventional mortgages. Is FHA adopting this right now?
Not right now, but they are going to adopt it. It's in the early pilot phases right now.
So FHA is already following suit. So VA is the only one that has not. And what tends to happen is the uniform gets aligned. I mean, the industry gets uniformed and aligned. So VA is probably not going to want to get left behind with these subjective, outdated, old appraisals. So I would bet that as this rolls out, you're going to see VA follow suit, just like FHA is already doing. But currently, this only affects Fannie Mae and Freddie Mac. As far as appraisers, next question was, do appraisers have construction knowledge to make a level of quality adjustments? So this is probably related to that Q1 or Q6. How would you respond to that, Natalie?
In their training, in their appraisal classes, all the certifications, they learn that information.
Perfect. Anna, did you have anything else?
No, just those 2 questions there.
Okay, thank you. Okay. Major change number 4. Photos are no longer an afterthought. They're a core part of the appraisal process. And some appraisers already do a really good job with this. They basically look at it as a protection for their business and they take photos for everything. And in fact, it frustrates me sometimes because they'll make us be the bad cop. They'll give us an appraisal report and they'll say, you're at value as is. And then they'll take pictures zoomed in on every single crack and there'll be 1 page of 5 cracks and they won't say anything about it, but then it's there for the underwriter to look at and say, you said it's as is. Why do I have 5 cracks on the exterior? So now you're not going to have one appraiser that did the bare minimum photos and another that did 12 extra photos. They're all following the same format. And page by page, even almost, it looks like you have to put photos for everything that you're documenting. So would you agree there's way more pictures than were required before?
Oh, yeah. And when the lender receives the appraisal, it actually has to come in a zip file with all the photos. There's so many photos. So,
Yeah, so that's a big, big change.
yeah.
Okay. So adjustments must now be backed by evidence. Again, with them standardizing that C1 through C6 and the Q1 through Q6, you're not going to have that beautiful, remodeled, updated. It's consistent quality and condition ratings. Location and view premiums will be scaled. lot size differentials, and amenity adjustments. When I've talked to appraisers in the past, it's almost like I have to pick the brain. I'm like, hey, what are you doing for fireplaces today? What are you doing for garages? And they kind of just shoot for the hip and go, I've been doing 3,000 for this. And in this area, I'll do 3 to 5. So any other context you can give me on this slide here, Natalie?
Yeah, so the appraisers have to have market-based adjustments. A lot of them will use third-party software integrations within their appraisal software that goes into the MLS. Say if you're looking for a pool adjustment, well, just a simple example, houses in your neighborhood with pools, without pools, similar houses, and what's the difference in what buyers paid for that. And that has to be in their work file. And if they ever were asked by Fannie, Freddie, FHA how they got that adjustment, they better have all the data back in their work file to show how they got that adjustment. You can't just say, oh, 20,000 for pool. Nope. They got to show the data.
Yeah. And a realtor asked me recently, they said, well, how would you know? And I recall from the class, the appraiser said, look, my first choice is going to be that you can provide me a bid or an invoice. That's going to be my best scenario because then I have something that backs up the data that I'm using. But if you don't have that, then the next best thing that you can get is per the homeowner. Per the homeowner, they said that they did this and it costs that much. And so what you're saying is then they're going to have to take that and they're probably going to do their own third-party research on what the homeowner said.
Yes, correct. With what it's market based. What is the market paying for this amenity?
And I think that's
Or
another
these
good
types of
point.
upgrades.
That's another good point because a realtor said, well, what about my clients that are in the trades? What about my guy who has a Home Depot account and he can get 20% off materials and he does it at cost? Well, it doesn't mean that he doesn't get the retail value just because he got it done for 40% less. If that's worth $10,000 and he was able to do it for 6,000, he still gets the benefit of the 10 because it's the market-based value. And he just wants to provide the data that was granted, and the retail value of this is $10,000, right?
Yeah.
Okay, let's go. Major change number 6. It's no longer written for people. This is a big shift in technology. Lenders are doing it. Can you talk about, I don't think many realtors understand about QC and about quality underwrite and what a lender gets when the appraisals, and before a loan officer and underwriter even sees an appraisal, can you talk about what happens on the QC side and what Fannie and Freddie have been doing with technology already and what they're going to be doing even more of with 3.6?
Yeah. So every lender, before they actually get the appraisal, there needs to be some sort of QC process. This isn't very detailed in with value and adjustments. It's more quality. Pictures are all there, names spelled right. You have all the exhibits that are needed, minor stuff like that. Then also after that, the appraisal is submitted to Fannie Mae and Freddie Mac systems. And that's the system that's collecting all the data of the appraisals about the subject and about the comparables. So they know everything about all of the sales in the area. And then it's going to score the appraisal. It's 1 to 5. 1 is low risk, 5 is high risk. The cutoff is about 2.5. Anything over 2.5, you have some programs and investors that if your score on that appraisal is more than 2.5, you may need an additional collateral product to confirm that the appraisal value is good.
That'd be like they want a second opinion, maybe a desk review, or they want a field review.
Yeah,
This
or
happens automatically.
AVMs. Yeah,
Yes.
automatically.
So the appraiser sends in the report. It goes through software with Fannie and Freddie that every bank has to use, every lender across America. And they're
Yeah.
going to say, this is a high risk appraisal. And so we can come back to the client, to the realtors and say, yeah, we need a second opinion now on this.
Yeah, yeah. And Fannie and Freddie also will display a list of 20 comparable sales that their system thinks are the top sales, and it will rank them from 1 to 20. And then it will rank the appraisers' comparables within that ranking system. So if Fannie has 20 sales that they think that is comparable to this property and none of the appraisers' comparables are on that list, that's probably going to be a high risk appraisal to them. And it also does its own adjustments compared to the appraiser's adjustments. And you can get flags on that too, that the adjustments are too high or too little. You also have flags that the value is overvalued. So they have been collecting this data since 2012, I believe. So they have a lot of information to score this and review this. And so the underwriters are using that to review the appraisals and review the risk.
And that already happens. That's been happening
Yeah.
I'm surprised how many times a realtor said, well, what's QC? I've never heard of that. I mean, there's over 10 years of this, and now they're going to double down on it, it sounds like.
Yeah. Oh, yeah. Yeah. Now, I have heard, from underwriting perspective, just looking at the report, it's much easier for them to read because it is going section by section. So it's easy to follow. Everything's there. We haven't had to get any revisions, which is, I'm not saying that won't happen, but maybe the form is forcing the appraisers to answer the questions that we need them to answer. So we don't have to go back as much. And so they're reviewing them faster and the reports are better quality. So that's positive. And then there's also other QC softwares that flag consistencies or the name doesn't match, or this is a purchase and the refi, the boxes aren't checked. But I think this form is going to kind of take away a lot of those inconsistencies and flags and errors that the appraiser makes, typos and stuff. So
In the long run, it will be better. I mean, that's what we're
Yeah.
ultimately, the industry is shifting for consistency, less issues, and a faster process. It's just going to be a little temporary delay in onboarding these changes.
yes, yeah, it's going to be, I think it will be a little more expensive at first and a little bit of time, but then in the long run, it's going to be faster and cleaner.
Awesome. Well, thank you for your feedback on that. So in terms of timeline, we're already in testing. There's already appraisers doing it. They're already giving their feedback. And then November 2nd is when the true deadline goes into effect. And it looks like we're not getting any messaging that they're going to be pushing that deadline back. It looks like we're going full speed ahead towards that. Is that what you're hearing?
That is correct. Yeah. So lenders will need to start ordering these though before November 2nd, because that's delivery to the UCDP, which is the system that collects all the data. So I would say most lenders are probably shooting anywhere between mid-September to the beginning of October to forcing the appraisers to start delivering these reports. So it's coming quickly.
So realtors are going to be seeing this as early as next month with these, these changes coming to full force.
Yes. Yeah. And you have to get these appraisers also used to it, and they need to start doing them and get faster. Everybody does in the industry, not just the appraisers, underwriting, processors, everyone. So you have to start doing them sooner than that actual deadline.
So how does this actually impact agents? The appraisers that we've talked to, the one I had in the last class, it's, you got to help me get through this faster. You got to help me get the data that is required in this report. I'm going to pull a lot off of MLS. So part of how you can do that is just be really good with your MLS descriptions and put as much in there. So I have that tool to go back and reference. Give me the documentation inside the house of updates, remodels, renovations, and all the details that you would have about the layout or floor plan of the property. It's data centric. So everything you can get to help support that data and place that data in MLS. What are things that when we're talking about more data, where are you going to go to? Talk about your updates and service for roof and HVAC. Talk about your pool updates. List the energy upgrades that have been made. List the solar changes. ADU, make sure that you do the square footage correctly. And if it's permitted or not permitted, have the rental income comps, look at upgrades like smart home changes. These are things that the seller should have on hand. And you would want to encourage when your buyer is buying a property, teach them this and tell them to keep these things in a file. When you're going to listing presentations, have your sellers prepare this and have like a home file that documents all these things. Again, there's examples here of things I've already covered: bids, invoices, permits, before and after photos, receipts, warranties, etc. Anything you'd add to that, Natalie?
No, looks good.
All right, perfect. So what do you do as the agent before the appraiser? Get your MLS that's detailed, have a detailed MLS sheet together, have your list of upgrades, have the floor plan laid out, have your comparable sales, why you chose it. If there was a bidding war, multiple offers, provide that contextual information. Appraisers appreciate this. There's a misunderstanding about talking to the appraiser. You can and should speak to the appraiser. You cannot coerce or threaten, but you can provide this information. And my encouragement would be a very busy realtor selling 3, 4, 5 houses a month. Make those appointments. Once the appraisal's in the cloud, so to speak, as you heard, they know that the appraiser knows Fannie Mae, Freddie Mac, and the lender has that information. They're going to be much less likely to incline to change something if that's already out there versus your information allows them to have context where they're like, oh, okay, I can justify that adjustment of an extra $5,000. That could be the difference of you hitting value. So be proactive in building these pre-appraisal packages and meeting them at the property to give it. So that comes during the inspection. You're on site, you're professional, you're giving them information. Information is helpful. You cannot pressure them to hit a number. You can't say, we need you to come in at this value point, but you can say, hey, this is why I chose this comp. Hey, Sam Hughes is a very unique, desirable neighborhood. If you go one neighborhood away, the value changes drastically, and that would be something that you don't want to do because it doesn't have the same prestigious bidding wars that you would have inside this particular neighborhood. So you can give your context. You can't just give that specific number. After the inspection, there could be some additional information. If the appraiser is reaching out, it doesn't necessarily mean there's a value issue, especially right now. They might have missed something and they need to get your input to fix that. You don't want your property to be delayed. So please provide them that additional information and do it quickly. Because they're asking questions, again, does not mean that there's a problem. The biggest problem you're probably going to see is just getting acclimated to the form. If the report's taking longer, again, it does not mean you're going to have low value or denial. All these things are probably going to be happening a lot. And just, Natalie, from the few that you've seen, I mean, this is pretty much the standard, right? A lot of questions, a lot of coordination on the few 3.6s that we have coming in.
Yeah, there's a lot of time the appraisers are having to speak with tech support for their form fillers. So they're spending time on that. Things that some of their third-party systems aren't importing correctly. So I have spoken to some appraisers that have actually had to do a report in the old system to get the system in the information into the new system. So they're almost writing two reports. So just be patient with them. Like it's a big learning curve for everybody. There's a lot of technology, a lot of moving pieces to this.
So I would add to the bottom where it says respond quickly, stay professional, and provide what's requested. I'd also add and be patient. Know that we're all learning. This is a big change for the appraisers, especially.
Yes.
So we've talked about benefits. The consumers are going to get tighter, cleaner, more transparent, more accurate report. Lenders have better risk controls, cleaner underwriting, faster underwriting, and fewer requests to go back out. That actually benefits everyone in the transaction to prevent delays. And realtors are going to get a real opportunity to showcase upgrades. And I think get in front of some of these revision requests or issues because there's going to be so much emphasis on the data up front that makes it very hard to argue those subjective adjustments. Potential challenges, we've covered a lot of these. There's going to be a learning curve, longer reports, and probably longer turn times and fees. So just be prepared for that. We are giving you guys all the option to get this. We took those before, during, and after slides and made it kind of a bullet point format. So you guys can grab this. This is a great summary of the whole class of what you need as the agent and what you should be focused on. As far as just a couple of things to clarify, these are myths debunked. The appraisers only use price per square foot. I would tell you guys, this is one of the weakest arguments you could make is looking at price per square foot. Then you're leaving out the lot size and the upgrades and the finishes. So if that's your argument as an agent that you're getting your value at price per square foot, go back to that other slide I showed you and make sure you start looking at those other things. There's another thought that agents can't talk to appraisers. Every appraiser I talk to says, please answer my phone call. Please give me this information about the house. And they're going to need to talk to you now more than ever. And you can and you should talk about facts and data on the property. Just don't talk about value. Remodeling always adds dollar for dollar. As you know, your client who spent 50 grand for a pool is not going to get 50 grand in value. So help your homeowners understand that. And it's not true that AI is replacing appraisals. Again, the idea is to make appraisals more accurate using technology, and appraisers are still very much part of this process and required to be licensed. So with that being said, Here's my contact information. If you have any questions, reach out to me. There's a few questions I wanted to get to. So now maybe you can take this one. I just comped a house, went back a year in the same subdivision, about a mile out. There were not even 20 sales. What happens with that software of 20 sales when there's not 20 sales? What are they going to do for that?
Yeah, I mean, they're going to have to expand their search parameters. Are they going, do you have to expand it over a mile? Do you expand it more than 20% up and down in square footage? I mean, they're just going to have to look at location differences. I mean, they're going to have to do a lot of analysis on something like that.
So that's now with the automatic QC, that's what Fannie and Freddie are doing, is they're automatically pulling 20. So they might be going miles out. They might be going over a
They
year
might
out.
be
just to get to the
going
20.
miles out. Well, my experience that Fannie likes homes that are close by in the same neighborhood, but dated. And they would rather prefer a market adjustment if there is one than to go to all of these different markets miles away and then try to figure out the differences in those locations.
And again, if they're pulling a list of 20, they might only heavily emphasize the first 3 or 4, but they're still pulling 20 just to show the data set. So I think that's the more important point to make for Lisa. Stephanie said, is there a current sheet that shows values for adjustments?
No, so there would never be a sheet that shows values for adjustments because it's market based per market. Every market will be different. Every market may be different for a pool. Every market may be different for a third car garage. So the appraisers can't provide anything that would say just a standard like 20,000 for pools or 5,000 for garage stall.
But when you're Fannie Mae, you have 1,000 appraisals done in a particular area, you're going to see a red flag if someone did a out of the market adjustment. And that's what they're getting at. If one appraiser gave 10 grand for a garage and the last 99 appraisers gave 6, they're going to see that as a red flag.